Hi guys. So once again, we're here with the lovely Andrea from Multinet, who is going to share some insights in the property market from a financial point of view. So Andrea's from Multinet, and over to you.
Thanks so much, Melissa. It's always such a pleasure to be chatting to you about what's happening in the market, where we are, what we can foresee coming, maybe what we would hope to be coming. And today, I basically wanted to share with you a little bit, just in terms of, what's how can I say, chair people or chairpersons in the property groups. I'm not going to name any names, but there's a few of them that have what they basically want from the Reserve Bank, and in essence, where that leads us in terms of our economy growth, and just where that is at this point in time, and what we would like to see happening from the Reserve Bank's point of view.
That's perfect. Thank you.
All right. So in essence, there is a few chairmen from various property groups that are basically urging the Reserve Bank to please look at cutting the interest rates by 50 basis points. The reasons why they are saying that is due to the country's dire state, the economy dire state. And this is brought upon the fact that our unemployment figures were released this month, where they basically showed us that our employment rate is sitting at 32.9%. That's billions of people sitting without work. And then as well, they brought out the figures of the unemployment or job losses in the first quarter of the year. I think it was something like 237,000 job losses in just the first quarter of the year. And that's quite a bit. And that shows the state of our country, which is in a bit of a dire state. But the same chairman have brought out that the growth at the moment is stagnant. The inflation is low, and the rate has been still a bit higher than what it was pre-COVID times. And these three factors combined, this combination of those three, basically in essence is showing us that it's choking our economy growth. It's being stagnant, and we can't proceed. It's choking it due to these factors. So in essence, it's hurting the property sector. It's hurting the property market. So he is criticizing, or they actually are criticizing the Reserve Bank for being too cautious. And what they are saying is, please guys, with our country being in the dire state that it is, it's not growing, by reducing the interest rates, especially when the inflation is low. And if you had to look at what the other major people like banks are doing overseas, they have cut their rates. The major central banks have cut their rates. And then as well, that there's so fewer lesser financial burdens within South Africa, they are saying now's the time and room to drop the rates so that it can be a little bit of less of a burden on the South Africans, that they shouldn't delay, because at the end of the day it will be to benefit of South Africans.
Yes, and before COVID we were at it's always been between 10 and 10.5. So at the moment we're 11. So it'd be great if they could just bring it down another 50 basis points. It could be back to pre-COVID interest rate, which is 10.5. So hopefully they listen.
Yeah, so it will be very interesting to see at the next meeting what the Reserve Bank is going to do, whether they're going to remain to be as cautious as they have been, or if they will actually drop maybe even by 25 basis points, or if they are going to listen to the plea of all South Africans, where they say, all right, let's drop it by 50 basis points. But at the end of the day, they are able to work off the stats they've got and where they see South Africa's economy is growing to. So yeah, it will be very interesting. But something I actually thoroughly did enjoy from just an update in the market is Tony Anderson, which is Standard Bank's head of home loans, have brought out in an article in May how he said that how many homeowners are are women. And if you would allow me to explain or read what he basically in essence said, he said, more women are becoming homeowners and playing a bigger role in managing home finances. In 2024, 55% of the bank's new affordability housing mortgage customers were women. So it's showing a growing trend of female participation in the property market. So, I mean, that is awesome. You know, the fact that there's a 55% of the new affordable housing were women. So that's awesome. We're seeing that a lot of women are obviously, you know, making more of women growing their portfolios, growing their in so essence financial wealth, and so forth. So yeah, that was quite an interesting stats to hear as well about how women are taking also charge in the property market.
I love that. I really do. Such good news. And then yeah, I had a look at the F&B property barometer. And they just mentioned, it was actually, I love reading their what they put out. And they said, okay, so at the moment properties are taking a little bit longer to sell, 12 weeks. And they said overpricing obviously leads to a longer time in the market, which in being in the field, I can definitely feel. They are also saying that buyers are still price sensitive, which is true. It's also in the field, I can feel it. Buyers, you know, as soon as you go a little bit higher, the buyers are resistant. They don't put pen to paper. You've actually got a price exactly right, and then you get a good market reaction. And you can tell me if you feel this is right as well. They say the expected growth for this year is 3%. So would you think that's doable? What do you personally at or in the field? I'm not seeing the growth just yet, but I think if they do lower the interest rates, as soon as the interest rates will drop, I think house prices will slowly start increasing. So I definitely feel if they do lower the interest rate, that it will happen. But what are your thoughts on that?
Yeah, I mean, if you had to see about again what's happening on a global scale, you know, on a global scale, the world economy is slowly starting to stabilize, and that's good news for us as South Africans, because that means we are able to as well stabilize us slightly a little bit. So if the rates do cut, that would be phenomenal, because then I do see that you know being increasing and all the rest. But at this point in time, I can't see a slight improvement as yet, based on, you know, like we read about, I think it's 2 coffee updates ago or 1 coffee update ago, I'm not too sure, where Standard Bank has obviously explained that they see and they foresee a slight increase in the economy growth and property sector growth and so forth. So yeah, it would be very interesting to see what's going to happen at the next meeting, because if they do lower those rates, it would be nice, because then again, it's not going to choke our economy anymore, and the burden on the property sector is not going to be as heavy. So we want to see that growth, and I think when people start seeing those rates drop, they're going to come in like hotcakes.
That's it. Yeah, so it's still a good time to buy. It's still a good time to sell.
Yes.
Yeah, so definitely yeah, don't worry about that. But yeah, I'm actually excited to see what happens in the next meeting.
Yeah, we both very excited. You see, we both are gonna have our radios to our ears. Wait for that announcement. But yeah, so that's basically where we are for the month of May, and we're very excited to see what June is going to bring. And we just hope good things.
Great, awesome. Thank you for your time, and it's always a pleasure talking to you.
You're welcome. You're welcome. We'll chat soon.
Perfect. Okay, bye.